Okay, a quick rendition of gold. Gold is a very interesting um, asset right now. Look, I've done an article here at FX Street. Price for a gold price forecast plummets on soft US Treasury auction. So we had a soft auction, yields rallied, dollar rallied, gold has collapsed. What's interesting is the flow of how gold has evolved this week. So, start of the week, um, we had um, we had Friday here as a day one long, right? So, first day of long in the market length. Then we had an inside day on Monday, and then we had a subsequent rally on Tuesday. So, a secondary day of longs in the market. And now we're into Wednesday. And typically, what we're looking for as per the weekly template, as the further we progress into the week, the more likely we're going to see a correction. So, what happened today was um, beautiful because um, for myself, in picking up on Stacey Burke's methodology, one of his students made a comment on his YouTube channel and really reinforced the methodology for me. So, look, we're on the front side of the trend. As I've said, we're pretty high up on that scale in terms of expectations of a correction as we move into the latter part of the week. Now we've got US CPI tomorrow, so we've seen a lot of jiggery pokery, if you like. It's been a very volatile day, um, but that's another matter. So sticking to this, I've sort of drawn this template up, noting that um, we might have just locked in the high of the week on this move. But how did this evolve? So today we were all coiled up. We had the London put in a session low over here. We matched that in the New York session. So that's our double low. So that's our thesis. Even though we've got all of this price and balance and length to sell into and it was coiled up, there was a thesis to go long, double bottom lows. So at this juncture, we're in New York, and we're just ahead here of the cash open in New York, right? So, um, and we are there's the high of the day over here, right? So on a break of that high, considering the double bottom lows, our thesis is to be long. So now we've got on a 15-minute chart, we've had the um, break of structure over here. Now, if we go down to the 1-minute chart, which will make it clearer and more precise, with the trend line over here, we've got this. So there was the fake out, if you like. Um, there was the fake out, depending where you draw. Let's get this right. That magnet doesn't help at all. Sorry, so the low of the day was put in London. Um, there was the prior high of the day. And then it made a new low of the day, which makes this then the high of the day over here. And we broke that high of the day. I've just put out a template for me to help with this. So then the price then went on to, so we were back here. Let's pull it back. Let's pull it right back. Right. So we don't need this. So the price put in a fresh low down here in London. And then a low in New York. Right, so we auctioned down into this low. Which made this the high. And we proceeded to auction up for the rest of the day. And then we broke that high. So then we established a new low over here. And this held on a double bottom. So that was the trade, or even a break of structure over here. Regardless that we've actually come out of that trend line. So that was the trap. And we've moved up 2 to 1, or however you want to position yourself. So we actually came into that W. So anyway, so that was the trade of the day. Very nice. However, being day three longs in the market, breakout traders are trapped. If that's the high of the week, then the thesis is for a move in to the trend line. As we head into the US CPI. So we've actually got sort of an M formation here. So a 38.2 retracement meets prior support over here, and a subsequent move below the lows of the day. Sure, over here somewhere. A break of this structure opens risk of, that's better. On the 15-minute chart, we've got structure over here, but a break of these lows. So this is where we are today at this moment. We're actually making fresh lows since the analysis was drawn. So that's pretty bearish. But in any case, we'd like to see that smooth, but we've had a subsequent move down. But in any case, that's the thesis for the day ahead. Lower lows into the trend line. Break of these triple bottom lows. We've already seen that now. So pretty bearish on this into the money price imbalances with this trap volume, significant move lower.